Hey guys, so I just want to go over the trades for 215. You could enter them in on 214 if you see this before market close. First one is XOXL. We have a pretty big update today at 40.86. You look at the 3-month chart, has been hovering. The low point was 33 from a high of 74. If you go out to the year chart, it has touched around 28, 27 last year. But we're looking to do a trade at 318 for 21. So 318 and 21 is currently paying at least 0.65 or more. They might get about 0.68 or so. Right now the delta is 0.06, so pretty high probability trade. You could also wheel this with a sign because 21 I think would be a pretty good price to own XOXL in the long term anyway. So consider holding it, maybe wait for a bounce back and then sell covered calls, or you could sell them immediately back at that 21 strike if you get assigned on it. There is a pretty high implied volatility at 173. The VIX is a bit elevated, currently at 29, but I think it's a pretty safe trade, so I put the green circle at the 21. If you want to take a little bit more risk but get a pretty ideal return, you have to around the 23 or even 24 and then get about 4% in a month's time. Next one I want to look at is TXN. X Instruments. Look at the chart setup in the last 3 months. We did hit a low on Friday and it actually went below the Bollinger Band, but today we do have a slight uptick day, so there's a chance that it might mean revert and hover somewhere in between these Bollinger Bands, possibly at the 170, 175 range. But if we're going to go very safe, high probability trade, we're going to look at put credit spreads way below this area. So we put one at 140 put. You're going to sell the 140 put, buy the 135 put. And right now you could receive, sell the 140, buy the 135. You could receive a credit about 31. So it's a 6% return. It's 31 over $500 in buying power. Relatively safe return here. Delta 0.08. We could even, actually the delta's 0.11 there. So I think it's still a pretty reasonable trade to have. If you go to the 135, 130, which I also considered, the credit might be 0.24. If it happens to fill, I would probably take that one over the 140, but you might get filled around 0.2, and we're looking for at least 5% return in credit spreads to take on that available risk. If you have any questions, let me know. Send me a DM or leave a chat in the chat box, and so a good rest of the trading day.